Theme generative AI software developer C3.ai posting adjusted net loss of 13 cents a share in the second quarter, beating consensus, but revenue missed analysts' expectations at $73.2 million. Guidance for the January quarter also undershooting the street's forecasts. C3.ai, though, said it still sees unprecedented interest and traction for its generative AI offerings. Shares after the bell, however, down by almost 8%. Let's get a steer on these numbers with Gene Munster, Managing Partner at Deepwater Asset Management. Gene, was this an overreaction on behalf of the market to the guidance, or was it justified?
I think it's justified, and ultimately I believe that Tom Siebel is a legend when it comes to tech. I don't think C3.ai is a legendary company, and I think we saw it in the results. Let me just try to frame them in quickly. They grew revenue at 19% year over year. They're projecting, most analysts are looking for 20% growth next year. That's decent, but this is a small company. This is $340 million in revenue. They did guide down the next quarter by a couple percent. That's rare for companies that are at kind of a breakout position. And I want to put the 20% growth into perspective, is that Microsoft, which is 730 times the size in terms of revenue of C3.ai, they're going to grow at 14%. So much, much more difficult comparisons. But yet they're actually, I think, capitalizing some of the substance of this. And of course, NVIDIA grew at 206% in their October quarter. I think at the end of the day, C3.ai has done a phenomenal job of marketing themselves as an AI company. They will do a great job of implementing AI with their companies into their business processes. But I don't see this as a transformative AI company that is really the building blocks. At Deepwater, we want to invest in the companies that are essentially the building blocks. We have an ETF. It's the Deepwater Innovator Frontier Tech, and those are the companies that we're looking for. C3.ai is not in our ETF.
Okay, Gene, and the stock's down about 8%. It's recovered just a little bit. You think there's more to go?
I do. I just think that this is it's a $3.5 billion market cap. I think essentially it's going to kind of tread water here. I think that there are just better companies to own. When you listen to the call, Tom Siebel, again, a legend, but it lacks some of the substance that we like to hear from what really differentiates their technology. They gave some good examples of how, like, for example, the U.S. Air Force is using their technology on their call tonight. All of that is nice to hear, but I think to answer your question, Martin, is that I think that this company is just not in the same class as what I think some of the other, what I would consider true AI companies are. I hope the best for them, 20% growth. The stock right now is trading at a revenue multiple of 8 times, which is right in average of most software companies. And so it's neither expensive or cheap. And I just think that this is going to kind of turn towards the market, which is not where you want to invest in AI. This is such a massive opportunity. Your guest before really outlined that.